What's up, gang? Carlton Flowers here, your crypto pro.
Yay!
And we're going to take a quick, brief look at BTC, and I'm going to talk about a few things that I notice, and we'll just see what the charts are telling us at the moment. And then I want to show you something from back in history and show you a similar movement that BTC made before that I actually lived through, because this happened in 2018. Or was it 2019? Well, we'll look on the chart. At any rate, let's break down the action on the 4-hour, and then we're going to switch it up to the 1-day chart and the 1-week chart and show you the event in history that I think is about to happen again right now. So let's get rid of my handsome face real quick. And here we are on the 4-hour chart. So first off, one thing that I noticed right off the bat that sticks out like a sore thumb is that at the current price that we are sitting at $32,030, we're below the 200 EMA and also the 50 EMA, and we're below the point of control price on the visible range with the VPVR. This is the volume profile indicator, and the difference between the VPVR and the volume that you see down here, here it is. This volume is how much buying and selling went on during a particular day, or for the particular time slot or the slice of time that these candles are. This is a candle right here. And this is all of the trading action that took place in a 4-hour time period. So every time you see a new candle formed, when you bump from, say, this green one to this red one, that means we had 4 hours here, and when that's done, we move to the next one. This one had this action in 4 hours. Then we move to the next one. So each new candle that you see on this chart represents a slice of time of 4 hours. That's why you always hear me saying we're going to look at the 4-hour chart, and then we'll look at the 1-day chart. So on the 1-day chart, each candle represents all of the trading action that took place in 1 day. So let's say, for instance, this green candle right here, whenever it started, here was the price, somewhere around, say, 31,000, say 800, somewhere around there. And at the end of the 4 hours, the price went all the way up to about 32,100 right here. And then it closed. The candle is green because, that's my phone ringing, sorry about that. The candle is green because the price closed higher than where it opened. Now we are on the next 4-hour candle. We see it right here, and it's red right now. And that's because the price that BTC is trading is lower than where this candle opened up. That's why it's red. But it can turn green if price moves up before the end of the 4-hour time slice. All right, now let's draw some more stuff on here. Let's look at the stochastic, which here we see the stochastic settling down. We're wobbling around here in indecision, and we do have the fast line, the %K, which is the blue line above the red one, which would indicate moving upwards, upward momentum, but there ain't much. And this blue line is probably going to curl back around and go down. Why? Because we see a red candle forming right here. Something else that we might want to take into consideration is the low volume. Look at the volume during this whole sideways time period. There's not a lot as compared to, say, this big green candle here, or when we jump out to the 1 day, you'll be able to see what the volume looked like before this entire sideways chopping action was taking place. And this, in comparison to the VPVR, instead of looking at the volume in 4-hour slices of time, the total volume of buying and selling that took place between the 4 hours, we're looking at the volume that takes place at a particular price. Now down here, you get a red candle if the selling volume was higher than the buying volume. That doesn't mean that all of the trading here was sales because it's red. No, it just means that there was more selling than buying. Same with a green. You get a green candle if there's more buying than selling. Now, when we look at the VPVR on the volume profile, it is telling us how much volume was there in this visible range on the chart where people were buying at exactly 36,000. And then we have a candle that pokes out to here. Or how much was bought and sold at 32,825. We get a candle that comes out right to here. The blue ones are buying, and then the gold ones are selling. And then this is the total volume that it sticks out to here. So this VPVR tells us when we are sitting at a price that is very popular, where there was a lot of trading activity going on from, say, whales, institutions, bot trading, or whatever. And when you have low volume on the VPVR, it says that this is not a very popular area where people are willing to trade. That's why I call this the slip zone. Because when we slip out of this popular area where there's a lot of volume at these prices, if we fall below this, price can tend to drop quick into the slip zone because it's not a place where you had a ton of previous institutional buying going on. That's why I think we're probably going to go back down to this base level. And this will either be a support level or it could end up being a capitulation level. See this blue line right here? We had several times where we kept touching this line. And you know what I always say, you touch it once, twice, 3 times a lady. Then the next time we're probably going to go boop, and we're going to fall through it because we keep jumping on this floor. All right. And we're weakening that floor. One of these times you're going to jump on this floor and the floor is going to give out. Now, let's look at the MACD. It looks like we have a crossover happening here where the blue line is overtaking the red line, but we don't have a lot on the histogram. Notice how small these bars are getting, and each hump is getting smaller and smaller. That's not good. Okay, it does mean that whenever we get another significant move where the MACD histogram bars get big again, we're going to have a big move up or a big move down into these areas. All right. So for right now, if I have to guess, it's looking like, we bounced hard off of this floor. It provided a good support. That was kind of neat how we got this big green candle, but notice how we're red again and it might be turning back around. It didn't even make it back up to the 200 or the 50 EMA line. It's given out before we even get up there, and we're still below this big point of control volume node. Notice how we're snapping to this node right here. See how this is popular? Price tends to snap up and down, and it pops between these nodes. All right, so now we're popping to this one, and if we fall below that, what do we have? The slip zone. All right, now let's jump out and look at the 1 day. And on the 1 day chart, each candle that we see on the price represents all the trading activity that happened within 24 hours instead of 4 hours. So for an entire day, like this red candle right here, that was the price action. That was the range of trading for an entire day. So we see that volatility is going way down. Now, one thing is we look at this stochastic and it looks like we have a crossover about to happen. So this would normally say, hey, we're about to move up. But what we want to watch is how far is it going to move up when this cycle goes up to a peak. And notice how these peaks are declining. Here was the peak here, and it corresponds with this lower high. The next peak gave us an even lower high. It didn't do much there. So if we keep with this continuation, the next stochastic peak is probably not going to give us a big bounce. Maybe it'll push us up to the POC. Maybe it won't. So it's weakening. Now, as the stochastic looks like it's ready for another push up, since we're getting declining returns, we look at the MACD here. Let me scrunch this down. And it doesn't look as good. This one is lagging behind the stochastic. And it's not looking so hot. So notice how on the oscillators with the MACD that the fast line is about to dip below the slow, which is contrary to this crossover that says, hey, we're about to move up again. The momentum here, we came all the way back up trying to creep to the zero line, and it's petering out. So that tells me that if the direction that this MACD oscillator pair is going is down, we're going to look for another dip. Also, notice with the 1 day that we're not getting a big amount of bars on the histogram, which this is created by the amount of volume that happens right here. So as this is declining, we're winding up for a big move. So the general direction of all of these peaks that we see on the oscillators for the MACD is downward. So all we have to go by right now is that. Now, that's not to say that we can't have a major move or we hit the bottom of this line and shoot up. We can, because all it takes is a whale buying, a bunch of people jumping in and buying tons of Bitcoin. And it can happen because everybody right now is bearish and everybody right now is expecting this to happen. Now, this market is very manipulated. And I think that if we don't watch out, we can get caught. You can get caught with your pants down. If there's a bunch of shorts here where everybody is putting in short sales expecting for this to happen, well, those exchanges can push price up and liquidate those shorts and make a ton of money. And let me tell you what, that has happened many times in the past. But I'm still bearish. I still think that we are going to have this decline. And then if we look at, let's scrunch this down, look at this big node, these big nodes down here. Here we've got one right here that's at around what? That's the 30,000 node. Then we have another one at the 27,000 point. And then, of course, there's the big one at 20. Those are your possibilities. So we kind of tend to think that this one has the highest probability. This one has the next highest probability, and this one is least likely, but it is still a possibility. Okay? So those are the little pieces of evidence. We think this is going up, but this is looking like it's going down, and we have declining returns on every stochastic peak that tells us that the downtrend is still intact. So that's all we have to go by. And then we have to realize that the institutions, the manipulators, can fool us all and force us into a move where we could pop up to this volume node up here at 50,000. It can happen. It is possible. But the evidence is kind of in favor of Bitcoin dropping because the alts are all bleeding right now. Now let's clear this and let's jump to the 1 week chart so I can show you this little moment in history that we need to pay attention to. If we jump back, let's move this up. And here we are. What's the date? The 5th of November, 2018. Here we go. When we had this bouncy, choppy action where we had this floor that was forming. Let's put a little line here. We had this floor of support, and everybody thought, well, this is the absolute lowest Bitcoin will go. But every time that we hit a peak, we were hitting lower highs. And so the trend was lower high, lower high, lower high, lower high. The trend is still bearish overall. So at the ending point of this wedge or descending triangle, if you want to call it that, the breakout was down because this fit the trend. And we bounced all the way down. We bounced all the way down to the 200 exponential moving average line right here. Had a new support, and then that's where the bull market started after that. So notice that. Here we go. We jump up and down, up and down. We're bouncing on this floor, bouncing on this floor, bouncing on this floor, and then the floor gives out, and we have a drop. So let's just kind of fast forward to right now. What do we see here? We've got to move this back to the 1 day to see it because it doesn't show up as clearly as it did back here in 2018, November of 2018. But when we jump into the 1 day, we can see it clearly that it makes a much smaller version of what we saw there before. So I'm thinking there's a good chance that we might see this drop out and repeat what we did in the past. Now, in my opinion, if we do dive down, if we take a dive here, I don't think the dive is going to last long. I think that we could bounce around, find a new base, and then all of a sudden we're going to start to rip up. And we're going to continue the cycle. So people want to say this is a bear market or this is a bull market. It doesn't matter. We're in a bearish trend. All right. It's a bearish trading channel. Okay. And I don't think we're going to clip short the cycle. We've never seen the overall market cycle get clipped short. So even though we have a big capitulation here, I think we're going to rip out of that in the fall. So what do I say? Make your Christmas wish list right now, because the alts are going to be coming down. BTC could be coming down. Be ready. So if this plays out and it happens, have your plan in place now. Make your targets of where you're going to buy in, because what I'm going to be doing is dollar cost averaging. If we get to the 27,000 point, that's where I'm going to start to buying my favorite alts. If it drops down below, I buy more. If it goes to 20, I buy more. But my DCA strategy will start around this node here. If we get into this area, this is where I'm going to be buying. Now, that's not financial advice. I'm just sharing you with you what I'm doing, okay? Don't bet the farm on what you see people talking about on YouTube, because we don't know what's going to happen, and anything can happen. It's up in the air. All we can go by is the clues we get on the chart. When you combine that with a strategy that works for you, then maybe you could come out of this with some money in your pocket, because that's what I plan on doing. I'm going to have another video coming out soon where I'm going to be talking about how to buy and when to buy and when not to buy. And this is based on one of my biggest rules, the cardinal rule: never buy into a run. If you're buying in a peak and into a run, you're late to the game. The people who bought way back here, they learned their lesson. They know by experience that you don't buy into these runs. You should have been buying way back before this run ever happened. So you better be praying that we get this dip here, because if we get that dip, then that's going to be your safe time to start jumping into the market when other people are panicking and selling. You buy when these things are in the dog days, when they're laying low on the ground, being lazy without a lot of volume. That's when I buy, and that's why I'm still way up on my portfolio, because I bought a lot of this stuff last summer. All right, that's all I got. Like, comment, share with your friends, tell a friend, and let me know if you want more analysis on BTC. I'll be glad to provide it. That's all I got. I'm out.